Financial freedom looks different to a lot of people. For me, I just wanted 2-3 years worth of bills in my bank account now so I could go try to figure something out, didn't have to worry about paying the rent. Because when you hit that point, you think differently, you sleep differently, you act differently. Life is different when you're not worried about next month's paycheck or payments.
Welcome to another episode of Break Away from the Rat Race, and today we have the pleasure of speaking with Logan Fullmer. Logan has a successful real estate business and has been operating it successfully for the last 10 years. But he began by buying foreclosures and flipping single family houses. And during his real estate career, he's built houses, refurbished commercial buildings, entitled and subdivided development. And he became also a self-taught curative title work expert. So that's a mouthful. And we can talk about that because I'm not even sure what that means.
No idea.
So this is very good. And then he participated in over 200 deals annually. So this is he's very experienced. And today he runs an office with like 15 people on his team. So Logan, welcome to the show.
Thank you.
And we're in studio today because Logan is visiting, he's from San Antonio, Texas, but he's visiting Miami. And that's why I have my co-host, my business partner and son, Antoine, is here with me to provide some more insights and great questions.
Great to meet you guys. Thanks for having me.
Thanks for coming.
So tell us a little bit more about yourself, your business, how you get started, and how you got started with foreclosures and real estate, and now you're doing a lot more in terms of commercial real estate. So tell us more about your business.
Well, first I'll say thanks for having me. Tim Macy is a near and dear friend to me. Him and his wife Pon are like, our closest family friends. And when I was talking with him recently, I said, "Who should I talk with? That's in space, whatever." And that's how he referred me your direction. So that's our connectivity there. And then my wife, Logan Fullmer, it's me, her, and we got 4 kiddos in San Antonio, Texas. Been in San Antonio for, I went out to the oil field business after a stint of working for a developer, working at HEB, which is a grocery store. I'll just trying to figure it out, basically. Wound up in the oil field. First time I really get to make some money. I thought, oh my gosh, I'm not poor anymore. I got a little satisfaction, self-esteem, like all these things that everybody forgets to talk about, but they're meaningful. And folks don't have them as much as they wish they had. So that was a really meaningful part of my career. Got to really save most of everything I was making, living in oil field housing and things like that. And I started investing. My dad was a CPA, my mom was a realtor, so I've been around some finance, been around some real estate, and I thought, wow, it seems like those two things together where people make money. And my brother and I flipped a couple houses before I went to the oil field with some money we inherited. Unfortunately, we were spending money faster than we were making it, and although we made a couple of bucks, it didn't go far. That's exactly what it was. And a lot of folks would say, gosh, it's terrible, that's disappointing. For me, it was great because I'd never made more than $40,000 a year in my life before then. I inherited almost 7 figures, and within 3 years burned through it. And I thought, we're flipping houses, we're going to get rich. And we weren't. We were spending more than we were making. And towards the end, I recall thinking, I realized this isn't going anywhere. So going to the oil field was the first time I got to earn real money by myself, and it was really neat. But the real estate bug, I still had that itch, just one more house, And so I started going to San Antonio on the weekends because it was the big city closest to the towns that I was working in, the little bitty cities where all the oil stuff was. And I started to see these houses and vacant lots that were just across the highway from the big city, or the big central business district. And the vacant lots on the appraisal district were $5,000. It was $5,750. That was the city's price for vacant land downtown. All of them were assessed at that value. And I'd seen some of the other big cities develop on the east sides. And I thought, man, if I buy these, they're so low priced, and it's been an established value for a long time that I could sell them for what I've got into them. I think I can get my money back. But if the value really happens, keep in mind it's the 7th largest city in the United States. And this was 2014 and 15. We were just starting to recover from that last economic fallout. So I remember thinking my downside is there's no downside here because I can get my money back But the upside, if this explodes, could be huge. So at that point, I don't know, about 4 or 5 years, I'd saved several $100,000, about $300, working in the oil field. And so I started buying these lots every couple of weekends, $3,000, $5,000, $10,000 a piece. So I got to the point where I got a couple dozen of them.
Wow.
And then in 2015, oil pricing started getting a little bit of pressure on the barrel price. And I'm thinking, I don't know how long this job's going to last. I get a call from a local realtor, and he says, my client found your name on the appraisal district, and you're in this corner lot's in a great location. I'm thinking, that's not a great location. And he wants to make you an offer of $200,000.
Oh.
And I go back, first off, I know I'm in this whole portfolio
That's
for
just a lot, right?
one vacant lot,
Wow.
8,000 square foot. And I go back and I look at I know I'm in this whole portfolio for about 300 grand.
Oh my God.
So I don't remember my basis on that one at the moment, but I think I can recover 2/3 of my investment with one property.
Yeah.
Several things happen. One, I know the market's moved while I was busy working in the oil field and I didn't notice. Two, I'm about to recover almost all of my money. And three, the rest of this portfolio is probably worth substantially more than I'm in it for. And then the fourth thing is I'm not a poor oil field worker anymore. That all happened in about a 10-minute thought.
The switch turned on very quickly, yeah. At one
Right.
point.
So an interesting point is getting into real estate without having any money. I didn't do it. I went to work and saved the money, and it was tough because I had friends getting out of college. They're buying houses. They're getting nice cars. They're having families. And I wasn't doing all that. I'm living in the man camp, working in the oil field. So it was a lot of sacrifice and not fun.
Yeah.
So do you borrow private money to do the transactions? Do you go just work and save every nickel and start? There are a lot of ways to do it. Now we're starting to use debt, local bank debt because we're established. But at that time, that's kind of how the trajectory started. So we go do some foreclosures. I meet a guy who owns a vacant lot right next to one of the ones I'm selling. And he's one of the other few land investors on the east side at the time. So we start being friendly. And we start doing transactions together. He's a super sharp guy. He'd been around a lot longer than I have. So we started to develop that business. He said, let's go to the foreclosure auction. We couldn't get the super cheap deals on the market anymore. So we go to the foreclosure auction, and the foreclosure auctions were busy, but not as busy as they are today. So we could buy a house for
the word is out now.
Yeah.
So everybody's there.
Yeah. So we could buy these little houses for 40 grand and put a for sale by owner sign for 60 grand.
Damn.
And we could sell them. But that only lasted a year.
Yeah.
And folks were doing the pre-foreclosure. So that was 2016 range.
Yeah.
So that was the basis of the business. From there, we started to capitalize a little bit better, and we always looked to buy something for less than it was worth. So a lot of guys, like you guys building an income portfolio, a single family, you're looking at income immediately, but you're going to pay more for the asset, and you're going to stabilize it and have management. And I wasn't looking for the cash flow. I was looking to access the equity and convert it to cash.
Build the capital.
Yeah. So as that grew, then we started to look at bigger transactions, more income properties, more of a stable business. Let's hire some people. I probably did it harder, actually. I don't know. Maybe I'm not in y'all's shoes. I don't want to say your work is not hard. But
we make it look so easy.
Smart people usually do that.
Yeah, but there's a lot of moving parts. There are a lot of moving parts, that's for sure.
Yeah.
So people don't realize land. At least your due diligence on the land is it's kind of like whatever's underground. Was there any kind of oil or any kind of pipes and tanks that are hidden below that, but the due diligence is pretty limited from that.
So what I liked about the land is I didn't have any tenants, I didn't have any hassles, I didn't have to fix anything. Now the negative is there's no income on it.
Yeah.
But the tax burden was so small every year because they were valued almost nothing. I mean, I could pay it out of a week's paycheck for the annual taxes. I didn't care.
Yeah.
So, I moved through that for several years. I started to hire some folks, train folks. I added a couple of business partners as a way to grow.
Still just doing the land. So you build a team around just the land?
Well, no, I built an ideology of buying something for less than it was worth.
Oh, okay, okay.
And then at that point, I started to say, let's get the foreclosures for less than they're worth. And then we went back to the land and started fixing some title issues because that was our only other way when the market started to heat up.
Yeah.
How do you buy something for less than it's worth? You got to fix some problems. Like an old beat up house, we'll land with title problems. And that ideology started to take shape in ranches, warehouse buildings, infill lots, small apartments, houses. There are a lot of title problems and legal issues out there that folks don't realize.
Yeah.
So that started to become a channel.
Give us some example of some of these title issues that you can take advantage of. I guess you're taking advantage of these title issues to buy the property.
Right. So
I've looked at land around here and around everywhere and stuff like that. And every once in a while there's like a 6-inch wide land that's like 200 feet long and stuff like that. Like, why would that even exist? And why would that be for sale on auction by the city? Is that so?
That's common.
Yeah, so that's kind of weird. But
it would exist because there was a mistake made somewhere when
Yeah.
someone's writing a deed or surveying or transacting, that happens fairly often. And because it's basically not useful, and the adjoining property owners don't even really know that it exists, or they're not very sophisticated. It's just a home. No one takes advantage of buying it on the cheap to expand their footprint. But when someone realizes they can't use it, they just quit paying the taxes. They say, fuck it, I don't care. And it eventually goes to the tax sale. And then you have someone like us poking around saying, is there any way I can capitalize on this? Is that old single family house that's been torn down and it's now a restaurant or parking lot? Maybe I can buy and sell to that guy.
Well, I was thinking of buying that 6-inch wide thing and then putting a big hole and have a big sign on top.
So the question is, how cheap can you buy it, right? Yeah.
So tell us so you're using these, are you looking for these title issues to capitalize on that and being able to buy it a lot cheaper? Or is this just something that when you find a lot that was kind of cheap, then you realize a lot of them have title issues?
So that's how it started.
Okay.
And then when the market started to get tougher to get really good deals, I started to say, I did a post-mortem review in 2016. I remember looking back saying, wow, these were the ones that we did the best on. So I started talking about it on Facebook.
Okay.
We can fix these problems. I've solved them before. These are some of the ways I do it. These are parts of town I've done it in. And I didn't realize what was going to happen next. Everybody has had a deal they can't close because the problem was too much of a pain for them to fix, and they just walked.
Yeah.
Realtors, title, escrow agents, local lawyers. I got local judges. I got everyone that you could imagine has seen a problem that couldn't close. So when I started to get the call, I started saying, let me figure out how to fix the rest of the problems. So the common ones would be like a break in the title chain.
Okay.
So a house maybe that's getting ready to sell from somebody right now to y'all, it was transacted correctly the last 3 or 4 transactions, but maybe in the 40s, someone bought the house and didn't record the deed. They just put it in their dresser and made a mistake or died or who knows. Okay. And then their kids sell it on a deed to the next person. But the deeds, there's a connection. That deed that didn't get recorded that's still in the drawer, but the house burned down or they hauled out of the trash when Granny died, that break happened. Well, there have been several transactions afterward that happened in a lawyer's office or non-title company office.
Wow.
So now you have a string of title transactions that are good, but that break back there still exists. And nowadays, title, they'll run 50 years back. And if there's a break, they say, you got to fix that break. Well, the deed's gone.
Yeah.
The people that did the transaction are dead. Well, what do you do? So that's one. Unresolved estates or orphaned estates is what I call it. Oh, let's say you pass away and there's hundreds of houses, but you don't leave a will. Yeah. And there are 2 kids. And in your mind, y'all work together. He's going to get your estate, the real estate. Yeah. But the other sibling says, well, I want it, and dad didn't leave a will, so the laws of intestate succession say that I get half and my brother gets half. Now you got to fight. Now you got a problem. Yeah. But the problem gets even crazier when there's 10 siblings. And one of them pass away and he's got 6 heirs. Now you can see how over time this could happen. Christ. So in San Antonio, a really old city, you have really old real estate transactions and people just move into houses they don't even own sometimes.
Wow. So, but what the hell do you do?
I know, right? That's the $1 million.
Time travel back.
Truly,
call him.
That is the $1 million question.
He turned into a firefighter in the 40s and saved the documents.
Right.
And they came back. Huh?
Well, that was some of the deals that you do. They're ranch, right? So that happens
with ranches a lot.
Yeah, because they kind of like the handshake and stuff like that. They're not going to go in the city.
Right. And the taxes are low. So someone's paying their ag exemption of $1,000 a year. No one cares. Yeah. But at some point, the ag exemption will fall off. The person that was working it passes away. Taxes get high. And that's a big red flag there. Or sometimes owners, they try to go sell because they realize they own some portion of this ranch that's worth money and they can't. Yeah. And that's when the distress, the hand starts to go up and say, we need help. Okay. To answer your question about earlier, what you've got to do is we got a private investigator, genealogist, and attorney in our office. So early on, we'd third party those folks.
I didn't even know genealogist was a job.
Oh, it's a job. Some people take it like a hobby.
It was a hobby. Yeah, okay.
So identifying people, how they're related, then investigator would find some of our guys and the investigator will spend time finding them all across the world. An expat hiding in Peru that doesn't want connection with literally anybody after a weird tour in the special services. We found him and cut a deal with him. We found people in Switzerland. We found a New Jersey resident in Canada on his vacation 2 days before the tax sale. It's a really interesting thing to do. God. And the juice has to be worth the squeeze. So some deals, it's a $70,000 property, and we'll pay 10 or 20 grand all in with the taxes, and we'll just immediately go sell it, make 40, 50, 60. Some of them we're in for $250,000 or resell it for $1.5 million. So you're talking $1 million in spread on a 4-month project.
Yeah.
But our money really isn't the resource there. It's the experience and the understanding that this isn't high risk because we know the profile.
So these deals come to you because somebody said, "Oh, there's a title issue with that. I don't know what to do." They call this. They know that you're an expert, and then you say, "Okay, well, I can deal with that, and here's a finder's fee kind of thing, and then we'll take care of it." Or
Yeah, that depends on the
strike a deal.
The components. We'll say, "Look, we'll pay you a percentage of the fee in the end. We'll pay you to walk away now." Sometimes it's such a mess. We'll say, "We don't really even want this, but if you hand it over to us, we'll take it. If we get lucky, we'll give you some money later. Then we'll write that up." But most of the times we're paying someone who refers it, depending on their involvement with the family and how deep the involvement is, some amount of money.
Okay. Wow.
Yeah.
So after that, from the land, after that, you decided to go more into kind of like residential and then eventually commercial. So how did that transition happen?
So we were always looking for some element of distress, ownership issues, title issues, tax sale issues, tax liens, whatever. And we stumbled across some commercial properties that were on the tax sale, and we always veered away from them because they're more expensive. So we stumbled across one that was a little bitty 2,500 square foot metal building, and a guy was running an AC contracting shop out of it. It's on 1 acre. It looked like trash. It was piled, I'm not kidding you, 50 dumpsters full of metal and tires. It looked horrible. And it was on the appraisal district for like $200,000. And the tax sale, they owed $15,000 in taxes. And I thought, if we can just give this guy $10,000 over what's owed on the debt and we pay the debt, I don't know what it's worth, but we can't lose. I'm always looking like, how do I not lose my ass?
Yeah.
No, I couldn't lose. So the owner was an absentee owner out of Florida. We called him. He just got out of the hospital, had a mobile notary come and deliver a cashier's check with a deed. So she took a $10,000 cashier's check to him. He signed a deed and a contract and a closing package at his house. She overnighted it back to us. We went and paid the $10,000 or $15,000 in taxes, turned it for like $25,000. Finally get the tenant out, haul all this trash out. We paint the building and pressure wash it and put some gravel on the side. So we're in it for about $50,000 or $60,000. And I call the broker and say, hey, the commercial broker, and say, appraisal district says $200,000. What do you think you can get me for it? He calls me back a day later and says, I can get you $400,000. And I'm like, what the fuck just happened? $50,000 to $200,000 to $400,000.
Yeah.
But the bigger, every time this happens, we're so happy when we have a surprise, but I always try to step back and say, what else did we learn here? And I realized a 2,500 square foot metal building on 1 acre was worth $400,000. That's the same as a home that's finished out. And when we went to sell it, we had multiple offers in a short amount of time, and for commercial, it's rare. So I realized there was big demand.
Yeah.
It wasn't as complicated as I thought it was going to be. So then I said, let's look for more commercial. So we started to do that over the next couple of years, and your capitalization gives you more confidence, more money, and more experience. So $200,000 deal, $400,000 deal, $600,000, $1 million deal. So it slowly just grew as we felt comfortable. And then I met a guy who was doing wholesaling, and he brought me a really messy deal in his town and said, I can't solve this. It had 60 owners. The one I told you about earlier, I paid $200,000, sold for $1.2 million or $1.5 million or something. So I worked through this deal with him for the next 4 months, 5 months.
Wow.
And we get to the end, and the bigger message out of that is this dude is bright. He's hardworking. I really enjoy working with him. He's very judicious with his money. I can tell. I've learned a lot. I've taken him to lunches. Like I'm kind of courting this guy because I see a light bulb in his head. It's kind of like when me and her went on dates. I'm like, ooh, I see something here. That's what when I met Kyle. I'm like, But Kyle and I didn't have any kisses. So I asked this guy, like, what are you doing? This guy wholesaled almost $1 million in net profit out of his cubicle in a year and a half at his job.
Whoa. And
I say, how'd you do that? He goes, I've been watching Steve Trang and Max Maxwell on YouTube. So I say, man, you need to quit that job. Do you want to build a business with me? And he says, yes. So he leaves all that. We start a business. And he's been doing these duplexes and fourplexes. So the moment we get started, he says, well, let's just do bigger. So 20 units, 40 units, 50 units. Uh-huh. And that business now is only about a little less than a year and a half old. And in that time, we've been doing the size of those deals have incrementally grown as we feel comfortable. Yeah. And we've also gotten really to learn the industrial real estate through that. We watch the buyers, what they do with it, how they fund it, how simple it is to manage, which has caused us to build a light industrial portfolio.
Most of them are triple net, right? I mean, most of these industrial.
Pretty much all of them are. It's a metal building, doesn't have any carpet, no cabinets.
Yeah.
The air conditioning system is on the tenant. It's just incredible.
Yeah.
You build a metal building, it doesn't fall apart, and you let somebody else manage it and they just pay you a check every month, or you evict them, or you collect a check.
Mm-hmm.
You don't even have to have property management. The guy at my front desk in my
that's
office can do one of those two functions.
Yeah.
Yeah, exactly.
Yeah. So what are the getting the valuation for these industrial buildings?
So the income, you really have to start to figure out, this stuff is built on the income model.
Yeah.
You need to figure out the rough cost to replace and then be able to depreciate it some amount to understand that. The income model is really important. And then the comps are important, but man, they're tough because all that data is held by the broker cartels
Yeah.
and the appraisers. It doesn't go on MLS.
Yeah.
So that took a little time having to figure out small multifamily, less than 100 units, sells at X amount per door. Income should be about this amount in these markets. And then the industrial was strange. It was $1 a square foot a month, triple net.
Mm-hmm.
I got friends in Houston, brokers that tell me that's the price. Our properties in Austin or San Antonio are that price. We find rural markets, that's the price. So I can tell you right now in Texas, $1 a square foot a month is your light industrial triple net lease. Like I don't have to do more math. That's it. The whole state.
As long as you know, exactly kind of what that area is.
So we spent some time figuring that out.
Yeah.
Because
I talked to a couple of other people that are doing industrial or light industrial buildings, and the way they do it is that they basically talk to the owner of the building it's the owner operator, and then they go in there and say, "Hey, we can buy your building and lease it back to you."
Yeah,
and then they already have the revenue model. They already know kind of all the figures, and they come up with a win-win.
So that wasn't our intent.
No, I know.
But that's
happened trickier.
That's happened 50% of the time unintentionally.
Yeah.
So this is I'll tell you a very common profile of the light industrial, and I mean like not concrete tilt wall. I'm talking about metal building, less than 20 foot tall, less than 30,000 square foot. Mm-hmm. This accounts for probably 75 to 85% of the owners. They built this building 10 to 30 years ago. They've been running their own business. They developed it or they bought it from somebody else. They're at the end of their business career and they're getting ready to get out of the building and either sell it, lease it, or they're still in it towards the very end of their career. Mm-hmm. And they built it, I'm just going to use a rough number of $1 million. They built it for $1 million. We're going to give them $1.7 million or $1.5 million. I'm thinking of a particular deal, but these numbers are very similar. So they realize they're making money. Oh my gosh, I'm gonna make an extra $500,000. I've depreciated the whole building. This is a good deal for me, and they're happy.
Yeah.
But what they don't know is we're the expert at valuing it, and he's selling to me for 1.7. But I realize it's worth 3 because I understand the market. He's happy.
I'm not listening to this.
He's happy. I'm happy, and it's a great deal. Now, I bet about 50% of the time, more or less, we're getting leasebacks because these guys are wanting to recapitalize. Mm-hmm. And they say, you know what, I'm being in this business for 5 more years. I'll pay you fair market rent, but I can suck $1 million out of my business. And they haven't spent the time to market. They're a great mechanic shop or a great plumbing company. They're really good at that, but they're not savvy real estate. They don't call a broker. They don't ask their friends. They just say, I'll take the $1 million. Mm-hmm. And another crazy thing is 1 million is like a magic freaking number, dude. If that building is worth anything below or above that, if you say $1 million, that stands out to a lot of people.
Mm-hmm. Yeah.
So if you can hit that number on something, man, it's the magic number to a lot of business owners. So it really helps you if the building is worth $2 million.
Yeah.
That's pretty interesting, but you're taking a little bit more risk though on these light industrial because unless you have already, your buyers, the people that are going to lease from you, the people in the industry, but it's a little bit of a. So if you know where to find these tenants, I mean that's pretty good.
I think what I'm saying here is it should help people that are listening and have some interest in it.
Yeah.
The reason I like doing these is because I felt like they were lower risk because when you're doing multifamily, you got to have 50 to 300 tenants. You have to have management. It's like a full blown business.
Yeah.
And I looked at that saying, oh my gosh, I'm smart, I believe, but I'm a simpleton in a lot of ways, and it's just too much. And I remember thinking these are the lowest risk commercial investments that there are. Because it's 1 to 3 tenants in a big building. It's not complicated. If you're going to rework the electrical, it's exposed.
Yeah.
You don't have to fix the plumbing because they have a toilet and a hand wash station.
Mm-hmm.
Like, it was the lowest risk type of pricey commercial that I could find. So while it is taking some risk, it's my opinion that it's the lowest risk of commercial that exists. Mm-hmm. And I'm encourage y'all and anybody listening to this, if you've never really looked or thought about these type of buildings, you never realized how many white cars there were on the road until you wanted to buy one, and then you saw they were everywhere.
Yeah.
Think about light industrial for the next 30 days.
Yeah.
You will be blown away. It is everywhere.
Yeah.
Wow.
Yeah, sometimes they kind of like
This building
hidden.
is very close to that.
Yeah. That's true.
Yeah, it is.
And you guys doing this all in San Antonio? I heard you mention Austin as well, but
So we started in San Antonio because it was close. Again, risk profile. It was close. We could drive to it. We understood it was low price. But as we started to understand it better, so we're doing across Texas now. So we've got assets in Houston, Dallas, San Antonio, Austin. And then we also do secondary markets. I'm willing to wholesale the tertiary market stuff, but the demand is so low, I don't want to own that.
Okay.
Yeah.
How do you pick your markets? Like, how do you pick your market? Do you find the right market, or do you find the right neighborhood? Do you find for these light industrials?
It's really about density and population. You know, if you're in like a primary market, it's not rocket science, man. I thought there was a lot more to it. One of my business partners is real detailed. He's a CPA, and it's not on this kind of road, and you have a neighborhood behind it and all these things. I'm like, dude, it doesn't matter. The rent rate's still $10 or $1 square foot a month.
Okay.
Doesn't matter. It's in a big area. A lot of people, it'll lease, and they just do. I'm telling you, this is really in my opinion, it's the lowest risk commercial.
Well, there are less people definitely doing that as well. So you might be able to find. Do you think you might find a better deal, or it's easier to find a deal?
That's a really interesting point. There's a lot of stuff. We come to these conclusions as we're working and say, aha, and then it becomes part of what we're doing. But I find apartments are super expensive these days. It's all institutional money, right? Yeah. Y'all both are like instantly reacting, right? Yeah. But if I say, how many big institutional money funds are going after light industrial? None. And who did I just say my normal buyer is? The mom and pop's guy? No one's looking at this stuff. Now, when you get into the big wall, 50,000 square foot and bigger, the tilt wall, funds are buying that stuff. But there's no real sizable money going after this small stuff. So when I'm calling these owners, or someone in my house calling these owners, they've never heard from anybody before.
Wow.
So there's no one going after them. So I'm not negotiating. They said they're going to give me $1 million too. I'm like, I'll give you $1 million. How about $1.1 million? No, $1 million. There's one down the street to sell for $1 million. I'll take theirs tomorrow if you don't want it. Okay, I'll take it. It's so much easier negotiation. It's quick.
Wow.
Yeah.
Interesting. And then, so light industrial, so you're still doing that today. This is still very active. How many deals do you do like a year?
It's funny. We average between 1 and 200 transactions a year. That could be from our wholesaling, the light multifamily, to the messy title stuff. Right. When you're talking about the wholesale, we're usually, it's weird, man. We click off about a little over 100 to 120 in that range on wholesale stuff. On the industrial, though, I'd say we're getting about a dozen a year of those.
Okay.
But the ones that are really good deals, we're starting to buy and keep them because I like them. I've also found that you can't be picky. Beggars can't be choosers, right? If you're going to get a great deal on a building and it's in Willis, Texas, which is outside of Houston, that's 4 hours away from my office. It's a $2 million property. We're buying it for $1 million. You're going to buy it. Now it's going to be a little more of a hassle to fool with something that far away, but for that kind of spread, we'll do it.
Yeah.
But I have 3 sites in and around the edge of San Antonio that I'm developing right now, so I can build a brand new, affordably to build. They're in high value locations, and I know for a fact that I can put 4 buildings on each site. So I'm going to be able to get 12 buildings done in the next 12 months in San Antonio, and I can directly affect the trajectory of the growth of that portfolio instead of marketing to see what I get. So we've gotten to the point where we really believe in it. So now we're going to really dump some money, and now we're going to definitely use some debt on that too.
Yeah. And what kind of companies are renting out this light industrial space?
Oh boy! So if you go from the small space, you only go any smaller than 1,600, 1,500 square foot. Once you get up to about 5,000-6,000 square foot, that's kind of where we're topping out on a single unit size.
Yeah.
But you got a landscape company, you got an air conditioning company, electrical company. A place like this, a studio would literally rent out 3,000 sure foot and build their walls in here and do their deal there. Yeah. A lot of folks call them flex spaces because they're so flexible.
You're getting a lot of FBA stores or like drop shipping stores.
I'm seeing some of that stuff, but we haven't gotten those kind of tenants, but I'm starting to see those in the middle of town.
Yeah.
A lot of our stuff is kind of at the edge of town because we get a better deal on land, but in a primary thoroughfare, the main highways. Yeah. And a lot of the trades surprisingly live not exactly in the middle of town. They live at the edge of town. So like, for example, a good one would be a painter. he's low impact. His 7 guys will show up in the morning and he'll come get their ladders, their paint, their sprayers, and then they'll get the paint they need for that day for these projects, and they'll leave from the site. They're not even in that building all day. They come back at night and drop it off in their trucks.
Wow.
That's a very, very, very common. One of them, a good tenant that I really like is the moving companies. They'll have a room maybe 3 times this size, and it's like a training room where they'll show how to move and how to like safely lift and stuff. And then they'll have piles of boxes and a little office. And they come in there in the morning, they get their boxes for the day, they'll take off in their trucks, and they don't come back till nighttime.
Wow. And then how are you finding these tenants?
With a big sign in the yard. Literally, no broker, no nothing.
Okay.
Wow.
So a lot of these, part of the reason I want them on primary thoroughfares is because it's easy to find a tenant because your traffic count's so high.
Yeah.
But also, it's easy for them. They can get in and out of home, into the city. They can get where they need to go quickly. So that's, for me, I'll spend a little bit more on the land to be on a primary thoroughfare because your asset value and use is so much better.
Okay. And then what are the cap rates you're seeing on the light industrial?
You know, it depends on the size. If you have really high density, some of these funds will buy them in the 6 and 7 range. If you got a smaller investment group, they want to be like in the 9 and the 10 range, something like that.
Wow. And that's still possible today?
No.
Yeah, no wonder. Yeah, because like last multifamily building we bought was a few years ago, like 2019. Because after that, it was just, everything was just way too expensive. Like, you know, interest rate was 4 or 5% and the cap rate was 3. And I'm like, how is anybody making, you know, unless you put 50% down, it doesn't make any sense.
It kind of worked both ways because we're able to sell 4 apartment buildings.
Yeah, so we sold everything.
Well, but
Just got unloaded them basically.
Yeah, because we bought them at 9 caps and sold them at 6 caps.
So I'm of the opinion that maybe you're not timing the market, but you're saying in a career of real estate, you'll probably see 2 or 3 big swings. This is a time for you to take tons of chips off the table, let things ease off for a little bit, and maybe get some new opportunity in the next 5 years. So I'm a big fan of that. Some people say buy and hold for life, and those guys get rich that way.
Yeah.
But guys that are making decisions that y'all do get rich along the way, but they take chips off the table along the way. So it's my opinion that you have higher levels of safety during those periods.
Yeah, but also, exactly. So we also have we also had higher returns. So we looked at the long-term returns for the property, and we looked at the return of, okay, well, we can get our chips out, as you said, get our money out, and then reinvest that in MartelTurnkey or other buildings or single-family portfolio or something like that. So
this is the way I compared those. You probably did that in your head some way, but our rental portfolio we bought for $10,000 to $50,000 a house back early on, and when it got to 2018-19 range, those houses appreciated over $100,000 each a piece in San Antonio. And I remember thinking, we're going to get 10 to 15 years worth of rent today if we sell the whole portfolio of 30 houses. I would rather sell those 30 and figure out what to do with 15 years worth of rent today.
Exactly.
And if you have to rebuy, yes, it's some work, but that's when we really started looking towards a commercial and say, I can take 30 houses worth of money and dump it into 4 commercial buildings, and I'm done in 120 days. So that's where that kind of shift really did happen, was because of what you're saying.
Yeah, exactly.
So tell us about kind of like, so you know, a lot of listeners, they want to get started in something in real estate. They want to achieve financial freedom and all that. So part of it is kind of like you have to go both ways. You have to build a passive income portfolio. On the other hand, most people don't have enough money really to get started in a big way. So they have to build capital also. So what's your recommendation of if someone wants to get started in real estate, they want to achieve financial freedom? What is, you think, the best way to get started, the best strategy to get started, and how they would do it?
So they don't make this a complicated question, because there are a lot of pieces to this. Financial freedom looks different to a lot of people. For me, I just wanted 2-3 years worth of bills in my bank account now, so I could go try to figure something out and didn't have to worry about paying the rent. Because when you hit that point, you think differently, you sleep differently, you act differently. Life is different when you're not worried about next month's paycheck or payments. So my goal was to go and work and save that money. But I realized when I step back and think about the way you're asking me is, I was building a real estate business while I was working in the oil field. So I kept my job until I got these big payments out of it. So I worked my job for 3 or 4 years at that point. And then I started to actually have some real money coming in from the real estate. My business partner, he paid more in taxes in that wholesaling year than he made from his day job, but he was working and wholesaling. So he was doing both of those until he started to build that. At that point, I'd say when you're making $1 million a year as a solo operator, I'd call that financially free, but you're chained to a desk. It's a weird balance. But you also got 10 years worth of living expenses after year one. So maybe you're free then. What I really love, the more important message out of that is, comes from my partner. He watched Max Maxwell and Steve Trank and learned how to wholesale with no mentor, no help. He literally watched it off of YouTube.
Yeah.
So that, to me, that's the message, is we have YouTube University.
Yeah.
And even for $400, you can get a class that's not a lot of money, but it'll teach you the abstract of what maybe you guys have learned over 10 or 15 or maybe more years for a few $100. Go pay, go watch the thing and do exactly what they tell you. Because it works.
Yeah. Wholesaling residential, wholesaling land.
I say start on residential because useful buildings have the most utility. If it's a house that can be rented or a homeowner can move into or can be flipped or an investor can buy it, lease it, whatever, it's got utility. I love that. Those, even when you have a crummy market, people still will buy them. You guys, y'all stop buying houses this month?
Well,
it's been up and down.
But you got some closing this month.
Yeah.
Y'all are still buying. If the price makes sense, y'all are still buying.
Yeah.
I'm still buying. The note making, single family note making guys, they're buying.
Yeah.
So I would really tell people, go learn how to wholesale single family houses on YouTube. That's the easiest, fast way to get there.
Yeah.
Now from there, everybody's path looks a little different.
Because I think if you do land, like if you're trying to do land wholesaling, is that a little bit, I mean, it's easier because of the due diligence and stuff like that. But on the other hand, you have to be willing to sit on that lot for a little bit longer, right?
Well,
is it like,
so when a market,
take longer?
if you go to the infill areas, what I did learn when I was doing a predominantly land is there's always a buyer or a speculator or a builder for infill land. A lot when the urban sprawl started to happen 20, 30 years ago, everybody's moving out of downtown and downtown started to dilapidate and whatnot.
Yeah.
But everybody's coming back downtown again. So the developers are building those crummy vacant lots, have a lot of demand. So I saw a lot of guys wholesaling purely infill vacant lots and they didn't have to hold them.
Yeah.
The diligence was far less. And honestly, a developer usually knows what they're doing. So they can look at that lot quick and say, does that have water tap, sewer tap? What's it zoned? What can I put on that size of lot? They know what they're doing.
Yeah.
So if you can just get that dead gum contract, if you're anywhere in the money, someone's buying that from you. Now, right now, I think a lot of infill land, unless you're in a really special place like Miami or New York or LA, pricing has probably been trimmed by 20, 30% on that kind of land because it has no utility right now.
Yeah, and also the developers basically are slowing down. I mean, where are they going to sell the house to?
And how the heck are they going to make sense of these interest rates, right?
There's also that big movement about build to renting, and I was just like, I don't know what's going to happen with that model now.
Yeah, they're all crushed.
Right?
Yeah, the big fund money.
Yeah.
Well, we went to a couple conferences. It was like a single family home rental conference, and half of it was about build to rent. And I'm like, this was early this
2
year.
years ago?
No, this was early this year.
Really?
Yeah.
Oh my God. Time flies.
In February or something like that, and we went there, and then we're like, "What? Don't you guys see? Like, what? You're at the top of this thing. You're building all these houses and whatever."
One of the challenges I find for them, don't digress too far, but fund managers get paid fees along the way, and since now Wall Street looks at single family as an asset class, which they've never done except for in the last 10 years. It's different. I say we'll go deep in it. With the economic ups and downs, you probably still get the same or greater yield in single family appreciation as you do the stock market. So there's a business case for it. Although they might have some liquidity crunch, you might have to make some capital calls. My gut says those guys still probably do good over the long term if they can get through the liquidity crunch.
Yeah.
I think one of the bigger messages is how are folks going to get started? That's... You guys have been doing this a while. I've been doing it a little while. And when we talk about these conversations, they get real high level. But my gut says 50% of the listeners out there are saying, I want to understand real estate. I'm going to listen to 50 podcasts and figure out what to do before I make a move.
Yeah.
So to me, that's probably one of the bigger messages in our industry right now. And simplifying what we're doing or pointing people in the right direction probably should be our biggest message for a while. I still have to go back to being a big advocate of the YouTube University. So let me ask you, how long have you been in real estate?
In real estate, well, it depends how you count. I bought my first apartment building when I was 18 years old.
Oh my gosh.
But there's a significant gap after that when I got back. I tried to do it in other cities, in the Bay Area and all that kind of stuff, and I just couldn't find anything that cash flowed. Up until much later when we decided to go back, but then we said, okay, well, let's do something different. Let's do passive income, and where do we find passive income property? And we knew it was not in California, so that's when I was working full time on doing consulting, and then that's when Antoine started like, okay, let's look
but
at
you bought your first
Memphis.
complex when you were 18. You didn't have him when you were 19. So there was a big gap.
Oh, there was a massive.
And then you get your son and say, let's get into this more. So is that when the
then we kind of looked at it and said, okay, well, where do we find these passive income properties, these things that are going to cash flow? We looked at all kinds of different areas, and where in the United States are we going to look for? We want to look somewhere that states that are landlord friendly.
Oh,
we
yeah.
want to look for things that are growing, but sustainable growth. We didn't want to have like a city that had like explosive growth, and then there was like, or too many people are moving in, and then the prices are all kind of wacky and all that kind of stuff.
You're looking for bedroom communities.
Yes.
Middle America,
That's
stability.
right. Exactly, and that's why we ended up.
So how did y'all come to that
Memphis
decision?
and-
The reason I'm asking is I came to this without a lot of YouTube. I'm just an entrepreneurial spirit trying to figure out how I can make a buck.
Mhm.
So I didn't take advantage of what's available today, but it sounds to me like you guys thought of it my way and just tried to start to figure this out on your own intuitively. Is that right?
Well, we had taken some training, so
Okay.
to kind of like I had some training with when I bought my 8-unit apartment building a long time ago, so I knew how to run numbers and all that kind of stuff for apartment building on commercial things. And then when we started looking at these passive income, it was a little bit different. So we did get some training, some kind of ideas on how do we calculate all this, how do we calculate the ARV, and how do we figure all this out. And also it helped to kind of like we're all on the same page about kind of like how we're gonna.
Oh, you're both looking at the same thing the same
exactly,
way.
The same way, exactly.
Got
So that
it.
really helped from that perspective. And then I think then it was a question of building the team on the ground. That was the thing that
probably the most work, actually.
that was a lot of work.
Well, wait a
He
second.
did
But
a lot.
y'all's real estate's in Midwest. Did I read that right?
That's right, yeah.
And y'all are in
Cleveland, St.
Miami.
Louis, yeah.
How much time do y'all
We're
spend
in
up there?
California. Not much. We have a good team on the ground, and they're handling everything.
How many years has that portfolio been there?
We started 10 years ago, almost
7
10
years.
years ago.
Dude, that's impressive.
Yeah.
So then, was all of your work with Dad, and y'all are going to some conferences, taking some education,
so
or did
it
you
was-
figure it out differently?
No, it was actually my brother wanted to go to this real estate seminar, and I was like, oh, that's bullshit. Don't go to that.
It's a scam.
Yeah, it's a scam. And
Buy houses with no money down, right?
Yeah, and then so A10, my brother and my dad went to the conference, and then I was like, oh, whatever, like have fun at your bullshit conference. Then they came back.
Antoine is always very supportive.
They came back from the conference, and then they were like, oh, we learned this stuff, and I was like, wow, what did you learn? And then we started talking about it. Then they got this online portal, so I went through that whole online portal, and I was like, oh wow, you can actually learn stuff with this, not really a scam. And then we went to this online portal, and then I was like, all right, well, I was in college at the time. My brother was a real estate agent in the Bay Area, and I was like, all right, well, let me see if I can help figure this thing out if you guys are actually down to do this. Because I've had, since I was 8 years old, I had a company, so I didn't have a company at that point. So I was like, all right, let me focus on this and see if I can help out. And then that's when we started to look at fixing and flipping houses in California, doing rentals in California. That didn't make any sense. So then we started looking at out-of-state stuff.
It was like commercial also.
Oh yeah, commercial real estate too,
Yeah.
development in California, because it's the only thing
Woo.
that really makes sense.
Yeah.
It's gonna be tough there.
Yeah. So then we started looking out of state where we had stuff that like fit our budget. $50,000 in cash. Where do you start? So we started looking out of state and found Memphis, Tennessee, and I flew out there when I was in college. Last semester of college, flew out there, bought a house, renovated it, rented it out, refinanced it, and then I graduated. Then we just kept going until he was able to leave his full-time job,
Wow.
and then scaled that rental property portfolio to a family portfolio, and then we started the turnkey business, and then we expanded that to like 8 different cities and states.
Yeah, because people were hitting us about, hey, what are you guys doing?
How do I do this?
Because we had done a number of different businesses in our lives, and then it was just like, and Antoine too, and so we're entrepreneurial family.
Very.
And then people are asking like, what are you guys doing now? It's just like you've done this sauce business, you've done this, you've done that, and it's not while we're doing like a real estate rental in Memphis. It was like
Like
my
what?
mind exploded. It was like what? with Memphis, real estate rentals, what are you talking about? Like, how do you do that? And that opened up a whole bunch of interest and questions from our friends and people that, our family members and all that. And that's when, said, okay, well, people wanted to invest with us, people wanted to do, they wanted to buy the house that was finished and rented out and say, okay, you're not.
So let me ask you this then. If I were to say, how would something start? I'd say find really smart people, follow them, watch them if you trust them. Also the YouTube University thing, and then you got to trust your intuition, and you got to bet on you. That's what you're going to do. You guys would probably have a similar recommendation, maybe. But if I would ask, what would you say? Yeah, would you say do it the same way?
Absolutely. I think you want to find someone. I mean, YouTube, there's definitely a lot of information out there, but there's also a lot of
trash.
There's a lot of trash, and they're
expensive
trying to
trash.
Sell. Yeah. So I think it's important to, but both of us are very approachable. I mean, we're both on, Instagram and TikTok, and then, you can book time on my calendar if you want to.
Oh, okay.
15 minutes to talk about, okay, what should I do? And there's a lot of people that I talk to, they know they want to invest in real estate, but they don't have the money. And the question is, okay, what do I do? Where do I get the money? And I had a call actually yesterday from a guy too, he said, wow, where do I make the money? Wholesaling that's where you have to get started. You have to build your capital, and then then you have a strategy where you
work your way.
Both, yeah.
Do y'all do any sub 2 stuff?
Pardon?
Do y'all do any subject 2?
No, I've never done that.
I haven't touched it.
Yeah.
I'm like, we're going to earn the money, or we're going to use bank money that we're responsible for, and we're going to do it right. And I almost look down on that stuff. Well, man, we did a couple transactions, and someone brought it to us. And I said, you know what? I'm going to do a sub 2 deal just because I want to know what it tastes like and feel like and whatever. Yeah. And it was a pretty interesting thing. And I thought, okay, I have all this debt in here. Didn't cost me a nickel. I treated it like it was my own debt because that's my personality, I guess.
Mm-hmm.
But it was interesting. That was in 2018. I ignored it. And then there's a guy that I started working with several months ago, and he does nothing but pre-foreclosures. Loans that are in default, folks that need to go. But the reinstatement fees are $5,000 to $15,000 for great houses for fair deals.
Mm-hmm.
And it's been a really interesting thing. We've always used our money or bank money, but as interest rates are starting to climb, I look at these proposals the banks are giving me. I'm like, ugh, you were at 4%. The last time I blinked my eye, and I'm talking commercial at 7% now, which still isn't horrible, but ugh. But then we start to look at sub 2 stuff, so we decided to build a small single family portfolio with pre-foreclosure sub 2. And really I learned what you have to do is you have to give the bank money to reinstate, and you have to give the person who's leaving the property that owns it $5,000 to $20,000.
Mm-hmm.
So these
so that they can leave the property, and then you can.
And they gotta have money to start over. Because at the end of the day, you might say their problem's not my problem. Well, yes, it is. If you don't fix their problem, then you ain't got a deal.
Mm-hmm.
So I would say we're probably in these deals for average about $30,000 a pop, but they're $250,000 single family homes that rent for $2,000 to $2,500 a month in San Antonio.
Mm-hmm.
And they're in such good condition. We don't really spend much. We do a make ready because these are their homes. They cared about. They treated it well. So that's been an interesting thing to bring up when we talk about folks starting without a lot of cash.
Yeah.
20, 30 grand isn't zero, but folks can come up with that a whole heck of a lot easier than they can millions to start a big thing.
Yeah. Or you wholesale the subject to a guy like you, which would be because the thing is, I get a lot of messages people below 5K. So
oh, fuck.
Yeah, exactly.
You know what my answer is? Keep working the rest of the year and don't buy that new car.
That's the thing,
save
too.
the money.
They have a spending problem. Or
that's the bigger message. Now you're giving them financial counseling, not real estate.
A lot of them actually, they bought these expensive kind of courses and programs, and now they don't have the money to invest. But keep going.
Yeah, that too. I mean, that too is or the guys that sell the programs don't make sure that the person has enough to actually do the things within the program once they sign up. So that's another story. But a lot of people that I talk to, just have a spending issue, and they can't save $10,000 to save their life. And once they get to 5K or 4K, they're like, oh, I can go on that vacation now.
Ball out.
Yeah, exactly. Or I can get bottle service now. So they go and do that, and they go back to $1,000, and then they DM me, hey, how can I make money in real estate? Well, it's like, if you had just saved that $5,000, you could have spent that $5,000 on marketing and ads to get some sellers in, to whether it's doing subject to or just wholesaling those houses to get from 5 to 10. And then you can say, okay, now I can do my own subject to deals. But it's like people almost need that financial literacy education to get them from 5 to 10. Because you don't need much money, but you still, I think there's also a misconception you don't need money to wholesale. I still think
you do need some money.
You need some money.
Yeah.
A couple $1,000 will go a long way, or else you're going to be calling Craigslist ads and like crazy stuff like that, or go door knocking, 12 hours a day. So you still need money for gas. So a couple $1,000 goes a long way to get started with wholesaling too. But
you don't want to be too hungry when you go on.
Right. Yeah.
Yeah, you still need fast food and gas to get around.
So, but let's talk about that, because I think like financial literacy and all that, and so some people have spending problems. I think we live in a consumeristic society. It's a big word, but but that we're constantly bombarded. Doesn't matter what we do about, hey, buy this, buy that, buy this, buy that, and then you have to have. I think that's number one. I think is to be frugal as much as possible, and then kind of like really pay attention to how you're spending your money. And
real estate investors are notorious for being cheap, wealthy and cheap. But the reason is the ones that are not frugal do not make it to be wealthy and cheap. They continue to be back where you were talking about.
Yeah.
We've lived, I think at this point we're living off about $200,000 a year in distributions now, which is itsy bitsy tiny fraction of what we're bringing in. But I still can't bring myself to just blow money like that. I can't do it. And we reinvest, and you have this urge to grow the business and all that. And then you come home and you say, gosh, we just did a deal. We did one last year. We netted over $1 million on it. And I say, she get a new car, I get a new car, and I don't know, something else we could get. And it's a great idea. And you just got that check and it hit the bank. And I talked to her and I'm like, maybe we're going to get a new car for Christmas. And I'm all excited. I know she gets excited. And then after a couple of weeks happen, it like the excitement wears off, and I'm like, but we could use that money for this, and we got to reinvest. We have to hire some people.
Guilt and regret.
Yeah.
Or if you buy the car, it's like the buyer's remorse the second you drive that shit off. Oh my God.
So then that calls us to not, and we're back in the spot where it's like, I would rather grow and save.
Yeah.
So there's an ideology of some folks aren't cut out to make it in these kind of businesses. If there are a lot of businesses, they're not capital intensive businesses. And those are good businesses for those folks. And I hate to say it, but I get folks that apply to my coaching program. They fill out a 1-page form, and we do a Zoom interview. And 70% of them, I want their money. But 70% of them, I tell them, this is not for you. You need to do something else, because I'm not going to take your money and put you in here if you're not going to go somewhere. I only want people that are going somewhere, and you have to have it here, and you have to have it here. So they don't have that, you got to go. But I direct people the other direction instead of saying, let me find a solve that work the best for you. I tell them, you need to be a photographer, dude, or you need to be whatever the hell it is,
Yeah, it's the same for us too. Like you can't be unscrupulous, Another big word.
She's got those.
I'm highly educated. No, but we've seen that. We've seen like people like just taking people's money just because they can, but you can tell that the person is not going to be successful. We talk to a lot of people. On MartelTurnkey side, but also on FlipSystem side, and you're not gonna make it. Like you don't have enough money to make it here, so you need to call us back, save an extra $10,000, and call us back when you're ready, and then we can. And this is what you can look at wholesaling, do something to build the capital.
That's the right thing, because I think you care then, and that says a lot about the person you are. Because I know a lot of folks that run operations on the newbie to collect some fees.
Yeah,
and man, they make a lot of money.
Oh yeah.
But
today it was funny. Today we had a sales call. So we have like 6 salespeople at our new company we started early this year, FlipSystem, which we can talk to you about later too. But we had a sales call today, and then one of the salespeople was like, shouldn't we just have these people sign up for these like $50K credit cards, and they can just sign up with, he doesn't have any money, but let's just get him on a credit card and pay it, and then he can flip his first house.
That's what those other programs actually do.
And then I was like, well, I said that. Other people are doing that, but I don't want to be putting somebody in a hole, because I'm going to get a call in 6 months. Hey, I'm getting charged 20% a month in interest. What should I do? And I'm going to
answer that.
I have no there's no solution.
So beyond the personal accountability level, it sounds like y'all also have. You know what else you got? In 10 years, you're going to have a class action lawsuit against your ass. And I know people in our town that have been on TV that have that, and they won the suit. But they still had to spend, I don't know, $5 million in legal fees.
Yeah.
and they have bad rep because of it.
Yeah.
It's not a good place to be if that's not what you want.
Yeah, we want people to be successful. I mean, we want to,
success rates.
we're building a community of people, of real estate investors, and then you don't want to have people like bitching that, hey, nothing works, blah, blah, blah. I don't have enough money. You told me I didn't. No, it's just like, you need to have some flexibility. You need to have a little cushion. You need to do this. You need to be able to, it's not predictable. It's not highly predictable. You never know what's going to happen 3 months down the road, 4 months down the road. So you have to have some cushion.
I agree.
So that's why. I mean, we don't want to have people bitching on call. People are happy. Still problems. It's still a problem, but at least
or a high success rate too. Helps with testimonials. Helps with if you say like 7. You have a coaching program too. So if you say 95% of the students get their first deal in 12 months, sign me up.
Yeah. Right. Yeah. You can say you can count on you're going to win. If you can get in and this works for you, you're going to win.
Yeah. Exactly.
So back on financial literacy.
Yeah.
So I have we talked about frugality. Oh, is that a big enough word? Frugality. But it sounds like frugality kind of goes hand in hand also with discipline, right? To be able to, I think, to constantly do the same thing over and over, and then kind of like tweaking the system. Wholesaling is a good idea for that. Same thing with some of the other strategies that we have in FlipSystem, and because you have to constantly do it. You have to do it on a regular basis. You have to have what's the word, like
the drive, the
drive. So you can do it like every day, consistently every day.
So I think you have to be in love with the journey. Probably the destination. You'll probably hit the number that you always told yourself. When I hit this, I've made it. I remember I told my wife, when we can drink nothing but Topo Chico, sparkling mineral water, and we don't have to worry about how much it costs, we've made it. Well, we've made that. We're there.
They're drinking Perrier.
We've made that, but I think you have to be interested in the journey, because if there are these goals that are, I don't know, any of these goals that you have, you usually hit them. If you care, you work hard, and you have the discipline, and you're smart, you're going to get there. Mm-hmm. So I find that we wake up. At this point, we've identified that we don't need another $1. Mm-hmm. Another new $1 to live the rest of our life. We're there. Even if the income stops from the real estate, we're already there in equity and cash. Mm-hmm. But man, every day I wake up and think, what are we doing today? What's new? What's exciting? Let's go fix something that's broken. And there's just something out there that you have to go do. Why do you laugh? Because there's a lot of broken things to fix.
Well, actually, we talked to, was that like 4 weeks ago? We talked to someone and said, like, you have to decide what kind of problems you like solving. Right? Okay. So he said, whatever business, he said, any business you're going to go with, there's going to be problems.
Lots.
But it says, find a business where you're going to like the problems you're going to solve.
Yeah. Right? One of them had like a cleaning business for like medical cleaning or whatever, and then he's like, I hate this shit. He was making really good money. They even sold the business and stuff, but they're making crazy money, and they're like, but we just wake up every day hating it.
High turnover in terms of employees, constant training, and like 50% turnover. Insane.
So that's not the
problem.
But
they had a very niche market, and Antoine and I were just like, I wish we had thought of that. We could do like a very highly specialized like cleaning thing and stuff like that, and we were I was very excited to talk to them about the business, and then they say, "Nah, business that sucks because all the people leave and all that kind of stuff," and that's because they were not that passionate about the business. It was a business that they wanted to do because somebody brought it to them and stuff, and they said, "Hey, this is highly lucrative," but they were not operators. Like they were not passionate about the business, and they didn't want to fix these problems, the hiring problems and motivated employees and stuff like that. So,
well, that's another interesting point. Maybe this doesn't go back to some of the messaging we were talking about earlier. But you start out, you want to make some money. You don't want to be poor. Then you come on this real estate thing. You figure that out. You say, oh, this is fun. I could do it. I enjoy it. So you're solving some of those personal problems and real world problems. So you start to build that. You start to build some equity. You grow a business. You have to start hiring some people. Probably everybody remembers their first hire, like big deal. Then your second hire, your first several hires, it's a big deal. You get to the point where you have them, and now you're running a business, and real estate is a product, but you probably don't touch real estate quite so often as you once did. Mm-hmm. You probably don't meet with contractors or any of that stuff as often as you did. At this point, I make a few calls when some of our high-level guys get jammed up, but I'm in my desk figuring out the problems we got, looking at finances, figuring out where we're going next year, doing things like this, building relationships and networks and expanding our reach. And I also find my time sitting at my desk thinking about the other people in the offices around me or our other office, thinking, how do they feel today? Are they getting paid enough to want to stay here? Are they happy with their manager? Are they happy with me? Do they feel like there's somewhere where they don't have to go to a big Fortune 500 company? Can they have a career here and be satisfied, make enough money for their whole career? Do they think the kind of work we do is good? Those are different questions now.
Yeah.
And I find myself spending a significant amount of my time doing that.
Mm-hmm.
And I enjoy that. I do like it, I found.
Yeah.
So that's a whole nother concept of business.
You have to believe that you're doing something good, right? I mean, even for MartelTurnkey, I mean, we're making money doing MartelTurnkey, but the back of our mind is that we're helping people achieve financial freedom. We're helping them build a passive income portfolio.
That's a different message than you had when you first bought the first piece of real estate.
Well, at the beginning, we bought it for ourselves.
For your financial freedom.
Yeah, exactly.
Right.
That's all.
But that's a big transfer in your business model.
Yeah.
You're continuing to build your own wealth, but now you're helping the other folks, and the widget is the real estate. That's part of it.
Yeah.
But those other people become.
And even the real estate is not really. It's really a financial product. It's an annuity in a way. It's something that provides that cash flow
It's the vehicle.
and appreciation.
Yeah.
Of that. If you find me another asset class like this,
you can't. That's why we're all doing real estate,
that's
dude.
the only one. I mean, the leverage, the appreciation, the tax benefits, the cash flow. I mean, point something that does the same thing, and I haven't found it, and I've looked. So
I think we all have, and that's why we get here. So in the United States, because citizens can privately own land, is why we have so much household wealth here by the individuals, the commoner, instead of in a lot of the other countries, the real estate's nationalized, so you can't own it. I think that's one big thing that sets the United States apart from everybody else, because we have these industries that we have here in all the other countries, but we have this substantial household wealth because of that particularly, I think. So I don't know that tech and medical have some pretty interesting multipliers, but I don't know that you're going to find something the common man can get into without tons of education, very specific, unique knowledge. Man, if an idiot can figure real estate out. I fell out of college twice, all this trouble and mess, and I figured this shit out. The average person can do it too.
And even high tech, I mean, the success rate for high tech is not that high. I mean, the VCs, they count on 10 out of 9 out of 10 are going to be a failure, complete failure. We're going to lose a ton of money.
Most of us, when you look at that, you don't want that extreme risk exposure. I don't want to build and fail 15 companies before one takes off, because I might not hit that 15th in my lifetime. Mm-hmm. But I know that I can get a house and I can rent it and I can refinance it and I can do that 100 freaking times. Mm-hmm. I just said it because you know that works.
And it's very simple.
And you don't have 14 strikeouts for one home run. I got it.
Yeah. You know what the house is. You know it needs to be fixed. You know you can rent it for more money than what the costs are. And very simple. So you don't have to worry about that. That's why when you talk about the light industrial, I said, well, this is a little bit. It might be very lucrative, but you have to get some experience, get a mentor, maybe someone talk to you and say, hey,
I tell you,
teach us about.
If you guys went to go look for one in one of your bread and butter, bedroom community markets, within 5 phone calls, 30 minutes apiece, you would have all that you need to know from me or someone like me. I'm not kidding you. I would totally encourage y'all to say, just go scan the town for something that's 4,000 square foot or smaller. And you have to do a little valuation work, calling some brokers, seeing what the cost to replace and cost value is over there. I'm not kidding you, man. You pick a couple of those up and your story might be different in 2 years.
Oh, wow.
I would really encourage you to do that.
I don't have 30 minutes.
Let's get this this business off the ground. So we talked about discipline. We talked about frugality and stuff like that. And to me, I think the big one is about the numbers, right? So really being able to run the numbers. There are a lot of tools out there that you can run the numbers, but in the end, I mean, go on Google Sheet and create your spreadsheet to look at the numbers and talk to other investors and look at other people's deal and then kind of like compare and stuff like that. I think it's important to understand the numbers and then being able to make some projections.
and to simplify.
Mm-hmm.
Because it can get complicated. I've seen some crazy spreadsheets,
right.
cash on cash, this, that.
Yeah.
I remember when we first started doing this with the guy that I joined forces with, he had a big rental portfolio at the time. And I remember I said, well, how do you decide what makes sense and what doesn't? And he said, I want a 15% return, which is high. It would be a net 15. But I said, well, how do you figure that out? And he said, all right, the house costs this much, subtract insurance, taxes, and do 10% for maintenance.
Mm-hmm.
And then he said, then after that, divide what's left over by the cost of the house. It needs to be 15%. And I was like, all right, I know what I'm doing. So I went and go look for some houses, talked to some people, and did the math. I'm like, oh my gosh, this is 6%. Ugh. And then after several of them, I'm like, oh crap. I think he means I need to get a really good deal to make this work.
Oh, yeah.
So we realized in our market, 12 to 15% back in 2016 was very doable. You just have to get some volume on your looks, and that really made sense. But I remember talking to people, and I'd already gotten the estimate from our insurance guy for what the insurance cost for a 3-bedroom house on the east side that was worth about $100,000. So I knew that number. I knew the tax rate was just under 3%. It's a $100,000 house, $3,000 a year. I was running these numbers in my head while they were telling me the offer.
Mm-hmm.
And this is back when I'm like sitting in the living room with the people sell me your house kind of thing.
Yeah.
Oh, wow.
So to me, that was very easy to decide what was, and we ended up selling on 10 to 12% return over time. I remember thinking, I got 3 things I'm computing.
Yeah.
And then I also remember thinking, gosh, this house is kind of beat up. I'm just going to peel a little. They said they're willing to do it for 70. How about 65?
Mm-hmm.
I just peel some money off it just to make it safe.
Yeah.
And that was my dummy answer to how do I make this rental numbers work.
Mm-hmm. And I think, and so even though you have to know the numbers, right? The numbers are not complicated. I mean, it's just addition, subtraction, a division. Is percent an aberration? Equal sign. So it's very, it's not complicated. You just have to kind of realize what it is you're looking at and how to measure, and then being able to look at that kind of like how much money you're gonna make.
How do you guys do it? What's your litmus test for that?
Well, we have.
Because all your face light, you're like, interesting. Like, all right, y'all are doing it different.
We built a CRM that pretty much you just plug in those numbers you said, and it gives you like the return after refinance, cash on cash return, cap rate, net cash flow, all that kind of stuff.
Okay, so it's a form basically.
Yeah, it's like essentially a form, because then we have like our acquisition team just doesn't have to think about it. They just have to go and pull the taxes, insurance, ARV, and then they just plug it in. It's like green check, red check. Okay, doesn't work, move.
Yeah, you built it in a way that it can grow larger.
Well,
easier.
When you're doing 50 acquisitions a month,
that is insane.
Yeah, they were analyzing
Are people
like 25
seeing
deals
that and saying, "I'm going to come to this market"?
Well, that's what people think it's so easy, right? So we make it look so easy, and then people think, "Oh yeah, I'm gonna do that. I'm gonna do what you guys are doing. You're no smarter than I am." Like, well, that's true.
That guy uses big words. I'd be careful about him.
That's true, right? I mean, you can figure it out, but you need to automate. You need to, if you want to find the deals, you need to look at a lot of deals to find the unicorn, and sometimes just the pony.
Yeah, they were scraping every single new listing every single day in 10 cities and analyzing them and making offers on all of them.
You know what? This is an interesting thing to talk about. If someone were to ask y'all, how old are you?
27.
Oh my gosh, I thought you were a little older than that. Holy cow. Okay, well.
He's going on 40.
You got that real good growth right there. So if 10 years ago, if someone were to ask y'all, how much do you think technology is going to affect real estate in the future, what would you have said?
Well, we wouldn't be where we are today without technology, without the phone, and not very expensive technology like the iPhone, because we were stuck in California. When I was looking at real estate, we were kind of stuck in California up until you get an iPhone with a camera and you're able to do electronic signature.
Right.
And,
okay, that's a good point.
Right? I mean, these two components, we couldn't do out of state.
Those two are game changers, but back to what you're talking about, scraping data from 10 MLSs with phone systems that allow call rails, with CRMs that allow this volume, with the forms that you put in a few things that computes it all. I remember my business partner 7 years ago saying, technology's changing, it's the biggest thing, it's going to affect real estate. And I remember thinking, how does it affect sticks and bricks and dirt? Mm-hmm. And now we'll start in our wholesaling business with 50,000 prospects from the entire state data set that we bought for like $20,000. and we're blasting that through through VAs, through people in our office. We're sending DocuSign contracts. It's probably a lot of technology use like you guys are using, and allows us to line up with about 10 to 20 contracts on commercial real estate a month from our office. We deploy photography. We don't even go. We're using these apps to locate photographers in other cities.
Yeah.
Without technology, our business wouldn't be.
Oh yeah.
70% of what it is now wouldn't happen.
Yeah. Just wait till AI.
Wow.
Yeah.
Dude.
Well, the AI is going to read Zillow and Redfin houses. It's going to already have 10,000 houses in data. It's going to read the photos and see how much renovation the house needs based on the photos.
Gosh.
Put that into your spreadsheet, and then it can go look up the property owner. It can pull the phone number, text them, email them the offer with the contract, send it in the mail. One person can submit 100 offers a day.
So you buy a computer and you get rid of 20 people.
Yeah.
A lot of the
That's
technology is
crazy.
available for free right now. If you go on Google,
The photo reading is
Google AI.
not there yet, but that's like the last piece to complete the full cycle. And then the only thing would be the title company getting rid of that.
Oh, and there's big talk about tokens and
The blockchain.
Yeah.
Yeah, we have a company that has that. Martel Invests.
I'm really interested to see how that's going to work. I believe that it's a difficult market to penetrate because it's got to go wide across the United States. It's got to go pretty deep. And there's a lot to penetrate. And then you can't just change one or two markets. It's got to be a wholesale change in ideology across the entire business. So how do you make a change like that actually take place?
It's going to take a long time.
That's
Yeah.
what I think.
Yeah, that's right. So,
So,
but
you got
there
to put all the title, like all those, there's like 3 or 4 big title companies. First American, Chicago, right?
The big boys. Yeah.
They're not going to let go. So it's going to be a hell of a fight. And they hold all the insurance and all that kind of stuff based on this. Because we started our
Until
own.
somebody can make
We started our own title company, and we run on First American, and all of us, all small title companies, write our piece of paper, write insurance on one of these big 4 companies.
Yeah.
It's like they have the power. It's not us, right? So
somebody's got to get to them one day and say, this is what we need to do, and you need to be the first mover.
or they do it. Yeah, that's what's gonna do it.
I suspect there are folks in those organizations talking about it right now.
Yeah.
And a lot of the titles, if you want to put the titles on the blockchain and stuff like that, then you need to have the cities, all these little cities
Everywhere.
online.
Our land records are archaic in some cities.
Some of them
in
are
all
still
towns,
not
Texas.
online. So
Yes.
Yeah,
it's
that's
a long
true.
way to go.
We have to send people because of some of our work. We do it in small cities, but you get massive big ranches for mega deals down there. Our guys have to go out to the courthouse like an old school oil landman and sit down and dig through the actual books and take pictures and copies of the deeds and build their own title report and bring back to our office.
Oh
sometimes.
my god.
It's archaic.
Yeah.
So how do you convert all of that?
Yeah.
Yeah, for us, we have another company called Martel Invest where we do blockchain, we do tokenized real estate. So it's a portfolio of single family rentals, and then people are buying into that portfolio of single family rental.
That's like buying a fractional share of real estate in Aspen,
Absolutely.
except for on the internet in a portfolio.
The internet and the
So you're
portfolio.
tokenizing
The
syndication,
portfolio.
maybe? Like that sort of?
Tokenizing the company that holds the title.
So the shareholders.
Yes, sir.
The shareholders, instead of a name, it's a token ID number.
Yeah. It's on the blockchain, and then you'll be able to, once the open exchanges are happening, then you'll be able to exchange your token or parts of your tokens to other people. That
Can you collateralize it? Like would one
well,
day would you go
technically you
collateralize with a bank?
you could, but
You could. Some banks are okay with it.
Yeah, you'd be able to refi your tokens.
Interesting.
leverage
Or
and
you,
stuff.
or you collateralize it for another project.
Yeah. I think that's gonna happen because that's gonna be. You don't have to worry about the title. The title is held by the company, but the advantage is that your tokens are pretty liquid. So if I invest $100,000 and I get 200 tokens, if I want to sell 50 tokens because I want to buy a car or whatever, then I can just do that.
So what's the advantage of y'all doing that?
The advantage for us is that we can manage the whole portfolio of single family rentals. So it's and it helps also a lot of the people that we're talking to with MartelTurnkey. They don't have the money to buy the property. They want to invest in real estate.
So you can buy one token for $10,000.
The token is $50. Yeah.
Oh. So now you
So if
lower
I have,
the
like,
barrier
if
to
I
all the
only have five-
millennials that want to invest on Robinhood.
Exactly. So now they can invest in real
So
estate.
you're broadening your market.
They're gonna get the
That's
cash
huge.
flow. They're getting all
My 12-year-old wants to make her first investment until I go out $50 token with these guys.
Yeah, buy your first rental
exactly.
property. They literally own like the actual asset. They own
shares.
Yeah.
Interesting.
So we think this is where it's going. There's a lot of people that can't buy the real estate, and then it's kind of they have to manage it, even though there's a property manager that's there. This feels like they're still the landlord and all. Now this is taken care of. The whole portfolio is taken care of them.
What kind of net yield do you think they get on their money?
So the cash. So we're very conservative in our numbers. So we put like a 7% cash on cash return. So that how much they can expect in terms of cash flow, and then like a 12% return overall investment IRR.
Oh wow.
Yeah. That's pretty conservative. That's assuming that we're just gonna do the
So
cash
this is
flow
simple for if
business
someone
there.
only has $100,000 to invest. They say I'm gonna put 30 in the stock market, 30 with them, and 30 in some local guy's plumbing company that's super high risk. We'll see if he makes it or not.
Yeah, and it's very liquid. So if you invest in the plumbing business and you want
you
your
ain't
money
that ain't
out,
liquid at all.
well, this is it's a little bit problematic to
The
find.
liquidity is a big deal, huge deal in investment vehicle. I like that.
And you can buy in, buy out very quickly. So you don't have any lags either.
Assuming there's another person that wants to buy that token from Martel.
Oh, we'll figure that out.
Yeah, I like that.
But this is a long term. Yeah, this is a long term kind of investment, like as opposed to a syndication where, your money is kind of locked in for 3 to 5 years, and then you get all your money back out in 3 to 5 years, and then now you have to find another one,
Right.
and there's a little lag between your one investment and the next investment.
So has no one, and this tells you I don't know a ton about this kind of technology. I haven't spent the time, but has the run on FTX and the bad news on FTX?
That has nothing to
people
do with
say, "Whoa."
FTX, right? Because FTX is, it's a completely different animal. They were kind of like dealing with.
But it's
like
shaking
virtual.
people's confidence
That's
in
right.
virtual assets.
That's right. But this is not a virtual asset. This is a real asset. You're owning real estate. The only thing that is the shares that are on the blockchain.
Okay.
So your ownership of the company is on the blockchain.
Okay.
So
That's the answer I was
to
looking for.
facilitate exchanges and sale of the token.
This must feel good. An older gentleman explained to a younger gentleman the technology. That guy that has the big words over there. Give me 5. I like that. That's good
I'm a
stuff.
big technology guy. So I
Sounds
think
like it. Yeah.
And the same thing you were talking about automation and technology before too, like to grow the business. There's so much. It's very important if you want to scale. Use technology, and we're using so much technology, and there's so many things out there. It's just like he comes up with all kinds of new application. Every once in a while, say, "Oh yeah, I need to do this. Integrate between these two, or I need to do this, or I need to do that." And
That's helpful for you to have that integrator. I'm in the middle of y'all's age, and I've intentionally said I'm not going to focus on the technology part. And I have partners that are really good at that, so I've become better at the business decisions, the people decisions, that kind of stuff. Yeah. And we have other guys that are able to do that because I've struggled with those abstract concepts, and I decided I'm not going to be good at that. So let me deal with other stuff. Yeah. Otherwise, it's going to be hard. But that's interesting to have stakeholders that are that locked in on it. So
because I think we wanted to make it also helps with consistency. So we had like workflows whenever the properties goes from this stage to this stage. Send these emails, create these tasks, assign, tell people to do certain things and all that. And the whole ecosystem, not just within the company. So
it's huge.
You would send something to the property manager, to the insurance company, to title, to this, to that, and so everything would be out.
We've got some similar stuff like that in our CRM when it comes to transactions. The moment we get a contract, they're notified for photography, transaction coordinator, title. That part of it has worked, but you guys have taken it way further for sure.
Yeah, and then now we're kind of blown away from the new technology that's coming up that we're using on the new application and the new business. And it's just phenomenal.
That's exciting.
Yeah, so very good. All right, so Logan, you had some training, some coaching, and because we're about to wrap up now.
Okay.
It's a good conversation, but I think we have to go and pack some presents or something. But so tell us about you also have like a coaching program. So tell us about that, how people can actually sign up for the coaching program, what the coaching program is about, and what they can expect.
So 3 things that I do have to offer in that area. I have a personal coaching program. I keep it less than 20 people because there's a lot of personal time, and we got to manage that carefully. In that program, normally the folks are in real estate. 2 to 5 years. They were bringing in net anywhere from $200,000 to $600,000. And I've been through that phase, and I'm really good at helping them get past that, because that's the phase where you need to start hiring new people, looking at your process and growing. You need to figure out how to capitalize yourself a different way. So that's part of what my program does, help folks get over that. And then once they're over that, maybe they're past that, we're looking at moving on to commercial, bigger assets. So that's a personal coaching program that I do have. Folks can find me on Instagram, just send me a message or Facebook.
Mm-hmm.
We get that stuff quick. We do have
What is your...
The Real Estate Junkie.
Okay.
So you just type in The Real Estate Junkie, you'll find me.
Okay.
And then the programs, we do have some educational stuff out there. We've got one for curative title work. We touched on that a little bit.
Mm-hmm.
It's an 8-hour framework. I did a big presentation in San Antonio, and we recorded it and turned it into a program. So that's online. I've got a link tree there on my Instagram account and TikTok there.
Okay.
And then by the time this is out, our wholesaling commercial real estate will be out. We are just bombarded when we talk about our commercial wholesaling with messages about that. We just simply don't have the time to help share it, although we love it and we want to.
Mm-hmm.
So we did build a course. That's about 12 to 14 hours of content, and we go through A to Z on how to wholesale the commercial stuff. We go from small little buildings up to, this would be the biggest transaction we've done right now. It's a $25 million apartment complex. It's a grade A asset in a primary market. Top quality buyers doing 1031 exchange money. They've got investment advisors wrapping them, and a broker and an attorney. So it's a high value transaction. Mm-hmm. So we go from the little stuff all the way up to that, how to do it. Wow. So that one you can find on Instagram.
Okay.
Yeah.
Instagram, click on your profile, and it's going to bring you to Linktree.
Yep.
And then you have all a bunch of...
You start clicking around, you'll get right there. Yeah.
Eventually.
We did decide to do some intro videos.
Yeah.
But a little bit more, they kind of explain some clips from it. So there's a good, a 10-minute video of a lot of good details. So I'd encourage folks, don't go spend the money if you don't think it's for you, but click on it, watch it, and really think about it. If this is what I want to do, and I'm really serious about it, and I've already figured out how to wholesale real estate, and I really want to move up to higher value transactions, then that's the right move. Yeah. I'll tell you up front, it ain't cheap, but it's how we figured out how to do almost $6 million in assignment fees in our first year. Mm-hmm. So it is the A to Z of how to do it. It's exactly how we did it.
Yeah, keep in mind too, like, you make it look very easy and all of that, but people, you have to put effort into any of these programs, any of the coaching program that you're doing. If you sign up with Logan's program, realize that you have to put some effort. It's not just watching video and then the money is going to hit your bank account. It's a business that requires some time and effort. A
lot. We actually went through and did an entire block, subject matter block on the difference between residential and commercial. Mm-hmm. And a lot of it is the time, but we explained how different it is from capitalization, from time to expectations to all that. So there's blocks that are about exactly what you're saying. Yeah, it's serious.
Excellent. Well, Logan, thank you very much. And make sure you like and subscribe. See you next week.